After the bell, FedEx reported Q4 earnings and the stock is exploding up over 15%. We'll get into the more recent news with FedEx, as this is not a company we normally provide regular updates on. We'll take a look at some of the key headlines over the past quarter. We'll jump into the financials as well, show you that, minimal revenue growth, although that was what Wall Street was more or less expecting. We'll talk about the guidance for the upcoming year, as this was the fiscal Q4. We got 2025 guidance from this company. We'll also take a look at the technical chart pattern, since the last video that we did on FedEx was back in September of 2022, and we said FDX was setting up for a huge rally. We'll talk about if that materialized, and hopefully maybe down in the comments you can let me know if you made some money with FedEx. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about FedEx, ticker symbol FDX. I tell you what, it's not NVIDIA, it's not tech, but the stock's been doing pretty well. Over the last year, up 9%. Over the past 5 years, you're up 64%. You also get a dividend as well, and this company continues to raise that. More recently, back in June, the company raised their dividend by about 9.5% over the previous dividend. So that is very solid. Now, one of the reasons why they're able to do that is they're in cost-cutting mode. I mean, big tech's not the only one laying off workers. FedEx plans to cut about 2,000 jobs in Europe, as they had a lot of scale-up during the pandemic and a lot of demand get pulled forward. These companies are starting to right size. The company lost a key USPS, that's the United States Postal Service contract, for its air freight business. My guess is that was relatively low margin, as that is more or less a government contract. Now, on to the Q4 numbers. Revenue coming in at $22.1 billion. We'll show you that that's basically flat over the last year across all of their business units, aside from the very, very small, non-consequential ones. Basically flat revenue, some growth in ground, some growth in freight, but overall just 1% growth year over year. But what is sending the stock higher is the fact that we got 2025 outlook, that is the upcoming fiscal year for FedEx. They're expecting low to mid single digit percentage revenue growth year over year. And you might be asking yourself, well, how does that compare to expectations? Well, the expectations from Wall Street was for 3%. So depending on how and where FedEx comes in on this guidance, low single-digit revenue growth would be meeting expectations right at about $90.5 billion. Company just put up $87.7 billion. So you'd have some growth there year over year on that revenue side. But 3% growth, at least from the consensus, is certainly not mid-single-digit percentage. So there is a chance that this company puts up a number even stronger than $90.5 billion. And that is what is sending Wall Street into a frenzy, buying up FedEx shares in the after hours. We also got earnings per share, counting for some adjustments, $20 to $22 in earnings per share. The consensus was for $21.14. So that, along with kind of maybe the upper end of the guidance coming in for the revenue, certainly having Wall Street excited, as you're beating on both the bottom and the top line in terms of those estimates. Now, we also got news from the company on their buyback. We'll see that when we get over to the company's cash flows. They generate quite a bit of operating cash flows. They obviously pay that dividend, which went up 9.5% over the last year, but they're also buying back the shares, and they indicated that during the first fiscal quarter, and not every company does this, but we see it occasionally, where they'll announce a buyback, and FedEx says for the fiscal 2025, which is really the next 12 months forward, they're going to repurchase $2.5 billion worth of the shares, but they noted that they're going to use almost half of that, about $1 billion, just in the first fiscal quarter, which is really over the next 2.5 months. So that, along with the roughly 10% increase on the dividend, certainly shareholder friendly. So while you don't have explosive revenue growth, even as you start to look forward on this one, and you don't have kind of the tailwinds of AI or something like that, you have the explosive growth from the buybacks and that dividend that is propelling shares of this company forward. $22.1 billion worth of revenue. And when your revenue isn't growing, and even if we look forward and we give them credit for 4.5%, 5% revenue growth, well, it's being offset a little bit at this company, and we're seeing this really across the board, is you're seeing your your operating expenses, your salaries, your cost of goods. In the case of FedEx, potentially fuel as well, maintenance and repairs. These things are ticking up due to inflation, but the company over the last year, at least on the quarterly basis, actually drove up their operating expenses just fractionally to meet their fractional revenue growth. For the full year, they actually declined their operating expenses, as most companies have been trying to control costs, down 4% year over year. Here's your operating income. It actually increased 3% from 1.5 up to $1.55 billion for the full year. You earned about $5.6 billion. That was 13% growth. So the CFO and management over this company is squeezing out more profits despite rather lackluster revenue growth. It's exactly what you want to see in these kind of inflationary environment. You get a more robust economy, maybe some lower interest rates. That's something that could really propel this company even further going down the road. Now, got plenty of cash, got some debt on the balance sheet. Not a lot of it is current. Got about $20 billion in debt, but they've got, over 16.5 in either cash or receivables. Nothing to worry about really from a financing perspective. Here's where things get really, really nice for FedEx is we've got a year-end view on our cash flows. 2024, we put up $8.3 billion worth of operating cash flow. Now, I understand this is not Google, this is not Microsoft, but we've got a $63 billion valuation on this one. So this is not one of these multi-hundred billion or even multi-trillion dollar valuation stocks. So you have to keep that in mind when you look at this. $8.3 billion of operating cash flow compares a little less favorably to last year when it was closer to 8.9. But again, keep in mind, we've got a $63 billion valuation, just a 14 forward multiple that's probably likely to go down a little bit, although that's going to be offset by the fact that the shares are skyrocketing in the after hours by over 15%. So what do we do with this $8.3 billion? Well, we've got some capital expenditures. We've got to buy airplanes and other types of things, maybe different types of warehouses. That was $5.2 billion in the most recent year. Last year, they shaved off $1 billion there. It was $6.2 billion. So they spent less on their capital expenditures, kind of offset some of the decline that we saw in operating cash flows. So what do? Well, they're paying the dividend, and that's going to grow year over year, and they're also buying back the shares. They bought back $2.5 billion exactly last year. They're going to do the same thing again this year, but they told you that they're going to buy back $1 billion in the first quarter. So shares are going to have a bid underneath them over the next 2.5-3 months or so for FedEx. Look, we told you back in September of 2022, FDX was setting up for a huge rally. That was right around this area here. As we can see on the screen, shares of FedEx were at about $154 per share. It was right in an area of support. And here we are about 2 years later, a little less than that. And we're sitting closer to about $300 per share in the after hours. I've got a fake green candle. Now, the way I set these charts up, and I'll try to do this with all our charts, when you start approaching the red line, that is more or less kind of the top of the trend line. It's an area where you can certainly take profits. A light green line is kind of like I'm lightly buying at that area, and then the dark green line is absolutely screaming hot buy, and that's almost where we were back in 2022. Obviously, we're close to the top. If you took our advice and bought the shares back in 2022, these are areas where you can start to peel off on your investments, maybe reallocate some of your gains into other stocks that are set up a little bit better, but certainly we'll be back as we keep rolling into earnings season and try to identify more stocks like FedEx that are set up at this perfect buying opportunity, which we alerted you of back in September of 2022. Folks, that was FedEx Corporation's Q4. We'll be back later this week with Nike and then very soon with more. Thanks for tuning in. Good luck with your investments.